very much, Mr. Srivastava. Appreciate you joining in and speaking with us
Thank you.
here on CNBC TV 18. Thank you.
Thank you.
110 points on the Nifty, 16,861 is where we find ourselves. Now, Data Patterns is the next company we're speaking with quickly. They raised 500 crores via a QIP issuance. Proceeds of this will be used for funding working capital requirements, investment in product development and debt repayments. To get details on this and more, we're now joined by the management, which is joining us. Mr. Rangarajan is CMD of Data Patterns. He's with us. Mr. Rangarajan, good morning. Good to have you with us here. Could you tell us the investors who came in, first of all? Any large, marquee, well-known ones who've subscribed to this QIP? And if you can sort of tell us about the use of this, as I preface my comments by saying it'll be a split of using for product development and debt repayment. But if you can provide specific numbers, sir, go on.
Yeah, I think most of our original investors stayed back and reinvested. Axis came up very largely. Then we had a Nippon showing a lot of interest. Tata AIA increased their stake. They put in a lot of money, bids, more than 60 crore, 100 crores they put in. So a number of large institutional investors as well as MFIs, put in bookings. And we're very happy to see that the original investors retained and continue to invest in the company. So this is where the investors are. Coming back to the second question, yes, we've raised money, but a little bit of debt repayment kind of thing. But more importantly, the large portion of the fund we expect to spend on product development. We want to now scale the company now that we've gone public. Earlier years, we were actually, development was funded internally from the resources which you could generate. And we can incrementally do development on products. But the market situation has changed now. India has opened out to Indian industry largely. And the size of business here, opportunities are so huge. It's necessary to address that with more products. The idea was raising funds is that we already have a whole lot of development done, products done, a lot of building blocks done in various areas we have specialized in, which we are leaders in the market in the area. We want to focus on those areas, develop products in competition with foreign vendors, and see if we can address the market with those kind of products. The idea is to try to increase...
Mr. Rangarajan, sorry, just for paucity of time, can you give us some numbers, these new products that you're looking to invest into? What kind of revenue potential would you have? What are you targeting in terms of growth from these new products or these fresh products that you just alluded to?
Yeah. See, we are looking to increase our total addressable market to 30 to 40,000 crores from where we are today, 3,000, 4,000 crores. So we need to 10 times look at the size of market increase. We are specifically investing in areas of building our own satellites. 3 months back, we launched a satellite for a startup company. The satellite as well, we handed over the satellite to them, fully designed by us. So interest is to try to build our own satellites. This is one area where we want to invest money. Second area is a lot of opportunities coming in the radar. We do every part of the radar in India designed by us. So we want to look at positioning our radars for the MOD business. Third is in electronic warfare. And fourth is in communication. All of the areas, we have a whole lot of already developed technologies and products and subsystems. The idea is to reassign these products for the end applications which we're looking at, which will give us a very low cost of development vis-a-vis starting from scratch. So that's what we want to do, and this will actually give the addressable market increase substantially for us.
Sure. Mr. Rangarajan, just a word. I mean, you gave very bullish guidance, I think, at the start of the year as well, where you're talking about a revenue growth of over 40%. Do you still see that, as your base case? And also, are you confident of sustaining your margins at this 42% sort of a level?
At the present, yes. We continue to grow at 40%. The good thing is that we have more than 1,050, 1,100 crores orders in hand. We also are looking at some 2,000 to 3,000 crores single vendor orders on expect in the next 2 to 3 years based on previously delivered products. So we have an order book visibility for 2 to 3 years' time. And I thought this is the right time to start investing in future in the middle term to get the products in to scale the company at times. So this is what we want to do. Coming to the second question on the margins, since all the products are designed in-house, we work on a raw material cost rather than buy and integrate. So margins typically are higher. But that's more because of the amount of product development which we've done earlier days, which is written off, which is not really visible in the books, which is really giving us the margin. Yes, we will continue to, in the coming year, we continue to retain guidance the way we have done last few years. We will grow at 40% more is what we think. And also we retain the guidance of 40% EBITDA, we're thinking.
So you said, if I'm not wrong, just correct me, you said that you're looking to increase your addressable market by 10 times, right? Currently it's 3,000 crores, you're looking to get it to 30,000 crores. That is quite an aggressive ambition that you have. Yeah.
Yeah, see, what happened is India is now looking inwards in the defense business. They're used to importing products and integrating in India. And this is a time when India is saying, okay, now look inwards. So the opportunities are very, very large. There are two ways you can address the opportunity. One, to tie up with foreign OEMs and build the products here, because we need to have products. And there's a requirement that 50-60% of value addition is done in India for whatever we get into the market. So the second version is try to build systems ourselves. We are trying to follow the second alternative, try to build based on competency to be competitive with to foreigners. The opportunities are large, and this is the time we have to address opportunities of building the products.
Got that, Mr. Rangarajan. Thank you very much for joining in and giving us some highlights on the business. And with that, we're at 10 o'clock and we're back to the market. The market is not looking any better. We are practically down to the lowest levels that we saw back in October of 22. In fact, the low from where the market turned and started rallying was on the